Hello, this is Ryan Mallory for SharePlanner.com. Today is August 30th, 2011, doing a market wrap-up. So today we started off pretty bad, and then things got gradually better. I'll pull up a 5-minute chart on the S&P for you to see this better. And of course, we had a pretty bad consumer sentiment that came in at 44 versus I think it was 52 that was expected. We dropped right off the bat, and then we slowly climbed our way back, and then we dropped again. And basically what we were doing the entire time after that consumer sentiment report was trying to build pressure to break the day's highs, and we finally did that there in the last 30 minutes or so of trading. But then what got very peculiar was the last 15 minutes of trading, where we basically gave up a lot of the day's gains to only close up 3 points. At one point we were up to 1220, which was great, and then right when we hit that 1220, there was a flood of sell orders that came in. So clearly it was another shot by the bears to try and drive this market lower. They may be successful in the coming days. I don't know. You can see the volume was a little bit higher there going into the close. And then when the market closed, and you can't see it on this chart, but after the market closed, we actually dropped another 6 points because of futures trading. The selling just basically persisted in the 4 to 415 segment. So at this point, futures are flat. Don't know how that's going to be through the rest of the night. We're only down about 3/4 of a point. But looking at the daily chart, though, you will see that once again we stalled out underneath this trend line that started back in July 9. And to show you what I'm talking about, we started a trend line back on July of 09 that connected a series of higher highs, higher lows, and then we broke it with that huge sell-off back in early August. Now on the daily chart, that same trend line, we settled in at around 1120, rallied up to it, and then sold off again. So we tested it 3 days in a row, sold off. And then today it looked like we were going to close above it, and that it would be a non-issue and probably give us a good feel for a rally tomorrow as well. But that last 15 minutes of trading put us right back below it again. So for the bulls, that's very frustrating. For the bears, it's another sign of life that they're going to have another leg down in this market. Who's right, who's wrong? You're going to have to wait till 9:30 tomorrow. I'm going to try and tell you as much information going into tomorrow that you can possibly know. And I will say this, I don't think it's a game changer what we saw in the last 15 minutes. We have an ADP report that comes out tomorrow. If I remember correctly, last month that was a pretty bad report, and it led to a lot of selling that day. So there's a good chance that people are getting nervous about that ADP employment report coming out, and they don't want to hold going into those reports tomorrow. So instead of risking whatever gains they've had over the last week or two, they cashed out. But if the ADP report's good, we'll more than likely rally pretty strong tomorrow. That would be my hunch anyways. So, and the thing is, the ADP report used to not really be that big of a attention getter, but it's over the last couple months it has been. So be very watchful of that ADP, because it does give clues to what Friday's employment report will look like. So assuming that we can get through this, the underside of this July 09 trend line, the next stop is going to be around 1260, 1266, which is the necktie or the collar of this head and shoulders pattern that has developed over the course of this entire year and was confirmed earlier this month. So that's where the real resistance I think is going to come in. That's where I see if this market truly is going down again, we're going to have to rally back up to that. This just doesn't seem like enough of a rally to start another leg down. I think the bears need to get really squeezed out of their positions in order to see this market go much lower in the short term. So that's my thoughts anyways. Let's look at the Nasdaq. Similar chart in the sense of the head and shoulders pattern. You got the Nasdaq though getting much closer to the necktie or the collar of the Head and Shoulders than the S&P is currently. On this particular chart, we're only about 36 points away, so that's easily in a day's work. And it'll be interesting to see whether or not we run into immediate resistance once we test that. But overall, much more bullish chart in the sense that it is above the apex of the previous high. The S&P is above it as well, but just not as noticeably. Let's look at the Dow Jones, if I can type it right. Once again, above the apex. The Head and Shoulders pattern looks a little bit different on this particular chart. And unlike the Nasdaq, but like the S&P, it has a pretty good ways to go before it tests the neckline of that Head and Shoulders pattern. So the other thing, though, I would say about the Dow, you got a little bit of a channel that it's trading in here of late. So some could say that that is a slight bearish wedge. It may be. I would say it's at best a bear flag, or yeah, right now I would say it's a bear flag because you got a huge sell-off here, and then you got a nice orderly channel without giving up much of the losses that the bulls experienced, or gains that the bears took on. So that's a good bear flag pattern. If you're looking for one, the confirmation is if it breaks below this channel here. That's when things will start really hitting the fan. And one trade that I did get into today, XIV. You can see here it's had declining volume over the last 2 weeks or so. And what you have is a nice box here that it's been trading in. And if it could, and basically my premise was, is if it can get above this line here, it would make for a good entry to the long side. I also like the fact that it broke the 10-day moving average. You'll hear me talk about that a lot in this, and that stocks that are on a protracted downturn and finally break that 10-day moving average and close above it, usually see a nice 1 to 2 day pop. So I'm looking for a nice pop in this tomorrow, which honestly, or obviously, would be good for equities, and then probably close this out. It's a highly volatile ETF. It can swing as much as 50% in a day, which we saw when the S&P had some of its worst sell-offs. And this is one that you always have to adhere to a stop loss on. So what I did is I took a half position, or a position that's half the size of my typical trade, and went along with that, so I could have a little bit more leniency with my stop loss. I think my stop loss is at $6.99 on this. So anyways, that is my thoughts on the market. I just wanted to give you an update of what I'm looking at. I do think that there is a lot of risk. I think the selling from the last 15 minutes that we saw today definitely doesn't give warm and fuzzy feelings to the bulls out there. May reinvigorate the bears to try to take some gambles at the open tomorrow, particularly if the ADP report does disappoint. You'll already have a negative opening then, but yeah, some people will say that maybe that's a sign that there's something going wrong in Europe. There's no way to know that, and Europe will play a big role in the market today. There was a little bit more rumor mongering that was going on today over in Europe, or about the European banks, that was affecting the markets. So we'll see if we'll have to see how that plays out, if there is indeed news that comes out from overseas tonight or not. And if you haven't done so, by the way, sign up for the Trader Network on SharePlanner. It's free. It's a great way to meet other traders, to get involved in the chat room, place your own trades for people to see and comment on, as well as to start, blogging and just all sorts of things, uploading your charts, and basically getting new trading ideas, joining groups, all that good stuff. So be sure to check that out, and join us in the chat room tomorrow for trading. So long now.